Welcome back. Now let's revise place of supply. Now, in place of supply, the first thing which we should understand is that the entire place of supply comes from IGST Act 2017, because the principle of consumption is left to the discretion of central government. They are required to determine the principle of consumption. We need to study 8, 7, 8, 9, 10, 11, 12, 13, and then this 14. See, section 7 deals with interstate supply. How do you define interstate supply? Interstate supply is when the location of supplier and place of supply is in two different states, two different union territories, one state, one union territory. Totally 3 transactions are always regarded as interstate supply. First one, when the supplier is in India and place of supply is outside India. For example, export transactions. Second one, supply to or by SEZ unit or developer, so that any transaction to SEZ will always have IGST. It cannot have C plus S. There is no state influence. If at all tax is levied, it will always be IGST. And last one is in the taxable territory not being intrastate supply. If it is not intrastate supply, then it will be an interstate supply. For example, import of service. Import of service is not an intrastate supply. Consumption is in India. It will be regarded as an interstate supply. Section 8 deals with intrastate supply. Now, intrastate supply would mean when the location of supplier and place of supply is in the same state or union territory. Then we call it as intrastate supply. 9 talks about territorial waters. Territorial waters. Now, what does 9 say? 9 says if the location of supplier or place of supply is in water, then bring it to the nearest coastal state. Nearest coastal state. Whichever is the nearest coastal state, we need to bring the location of supplier or place of supply to that particular state. 10 deals with place of supply for goods, domestic transaction. What's the importance of this place of supply? See, this will help us to arrive at this, because what are the 2 factors which are required to determine the type of tax? Location of supplier and place of supply. 10 onwards we get to know the place of supply. 11 deals with place of supply, again goods, but international transactions. 12 deals with place of supply for services, domestic transaction, and it says that 12 will apply only when supplier and recipient are in India. Even if one of them is outside India or both of them are outside India, then we'll use section 13. 13 deals with place of supply for services, international transaction, where it says supplier or recipient is outside India. Okay, coming to 14. 14 basically helps with OIDAR services, and there is one 14A which deals with registration for online money gaming, which we will separately deal with online money gaming revision video. So OIDAR, there is a separate section to provide that they have to take a simplified registration. What happens when a person is providing OIDR from outside India? All that is dealt in section 14. So let's start with section 13, because once we are clear with 13, we'll be much more comfortable with 12 and further much more comfortable with goods related provision. Let's first complete the service related revision. Now, section 13 helps you to determine place of supply for services where either the supplier or recipient is outside India. So first, whenever you read a question, try to identify whether both are in India or one of them is outside India. The moment you see one of them is outside India, you'll have to apply section 13. That's the most common mistake which is made, that we don't even check whether 12 and 13 is to be used. We directly go by the type of service. No, first step 1 would be always to choose which section will apply, because there can be a variation in place of supply between 13 and 12. Now 13 1 only gives the name that this will apply only when supplier or recipient is outside India. 13 2 onwards, place of supply starts. Generally, the law says place of supply will be location of recipient. So if nothing is available, location of recipient is used. Say suppose I don't have location of recipient in the ordinary course of business. If not available in the ordinary course of business, then location of supplier. So if this is not available in the ordinary course of business, we go by the location of supplier. But remember one thing, use the default rule only when it is not a specific case, because the moment it is a specific case, you'll have to go by that particular specific case. 13.3 deals with performance based service. Now first understand what is the meaning of performance based service. Performance based service is where the goods are made available by the recipient to the supplier, and supplier works upon it, like treatment or processing on some goods, repair of motor vehicle, where the recipient gives the goods to the supplier and supplier thereafter works upon it. That is called as a performance based service. Second, where individual presence is required, physical presence of the individual is required, like beauty treatment, fitness centers, coaching classes, live coaching classes, where physical presence of the recipient is required with the supplier. So these two things become performance based service. Then coming to the place of supply, if it is related to goods and it is being provided by electronic means, then in that case the place of supply will be location of the goods. Say suppose there is a remote system located at some place and an engineer from outside India is repairing that remote system using one of the softwares. Then the place of supply will be where the goods which are being repaired are located. Then coming to others. Say suppose it is other than electronic means. Other than electronic means, the place of supply will be where it is performed. Wherever it is performed, that would be regarded as place of supply. Coming to individuals. Individuals where physical presence is required. Here electronic means is not there, but maybe in future I expect that electronic means might be added, because these laws were made in 2017. At that point of time you did not have a concept of Zoom lecture etc, and hence electronic means was not even thought of. So here the place of supply is wherever it is performed. Okay, there's one very important point in this. Say suppose it is performed in India. Now goods are imported from outside India for repair, processing etc, and re-exported without being put to use in India. Without being put to use in India. Then in that case, no 13.3. Then it will be a case of 13.2. Now, this is a case where, say, suppose from Nepal a music system comes to India, and that repair of that music system is done in India. So the repair was done in India. The place of supply should be India, but say suppose it is not put to use in India, then government has provided a relief saying that then we will not use where it is performed, but instead of that we'll go by 13.2, and 13.2 says location of recipient, so it will become a export transaction because recipient is of Nepal. Be very careful about this point. Then the next one is 13.4, which deals with immovable property. Now, immovable property, the law has kept it very simple, where the immovable property is located or intended to be located. Now, be very careful about some key points. Say, suppose it's a general opinion relating to immovable property, then it is not covered by 13.4, because 13.4 covers only cases where the service is related to a specific immovable property. Renting can be an example, architect can be an example, construction industry can be an example, anything with related to mining industry, right to use, all that are covered by 13.4. Then you have 13.5, which deals with admission or organization of an event. So both are covered, whether it is organization related service or admission related service. Then the place of supply will be where the event is held. Where the event is held. Then 13.6. 13.6 basically talks about more than one place, including taxable territory. And this covers only 13.3, 13.4, 13.5. So the service in the nature of 3, 4, 5 are being provided at more than one place, out of which one of them is in the taxable territory. Then the law says the place of supply for the entire service will be location in the taxable territory. So say suppose the consumption is happening at more than one place and one of them is in India. Then in that case, for the entire contract, place of supply will be India. Say suppose property is there at 3 places. One agreement made, one of the properties is in India. Then the place of supply for entire transaction will be India. So obviously, in real life, we will not enter into such contracts, because if we enter into a singular contract for all the places, then the place of supply of that transaction would become India for the entire transaction and not outside India for those properties which were outside India. Then 13.7, more than one state. Say suppose there is more than one state mentioned in the contract, then it will be to each state as per agreement. Now sir, if agreement is not there, then as may be prescribed, otherwise as may be prescribed. And is it prescribed, sir? Yes, IGST rules have prescribed that how do you divide it for different states in India. But careful, this is also applicable for 3, 4 and 5. That means performance based immobile property and event related. Then coming to 13.8. 13.8 says for three services which are covered under 13.8, the place of supply will be location of the supplier. It's very dangerous now, because the moment you say place of supply is location of supplier, what are the two factors which are considered to determine type of tax? Location of supplier and place of supply. Now if location of supplier and place of supply are same, then in that case it will become a interstate supply or intrastate supply. It will become a intrastate supply, though there are contradictory judgments. But Dharmendra Jani, Bombay High Court, which said that 13 will always be a case of section 7 interstate supply. But institute has given alternative answers saying that if location of supplier and place of supply are in the same state, it will be regarded as a intrastate supply and not a interstate supply. Similarly, the Bombay High Court judgment says it will be regarded as a interstate supply. So at present a final thing has not been given in the module, so we can write both the answers. Now be very careful about one very important aspect in this. The person who is covered in this, meaning the services, the person who is providing these three services will never get export benefit, because say suppose you are in India and you are the supplier. The moment you get covered in 13.8, you will not get the export benefit, because place of supply will always be in India. And for becoming export of service, one of the conditions is the place of supply should be outside India. This is one major issue which is being faced by the industry. Now what all is covered? First one, banking services to account holders. And the term account holder is defined a person having an account which bears interest. So any account which is bearing interest is regarded as an account holder. So there was a important clarification on this. What about foreign portfolio investors? Now foreign portfolio investors, they use the services of the bank for custodial services. Whatever securities they are holding, they have to hold it in Indian demat account, so they take the services of banks. What about that? Whether that will be covered in 13.8 or 13.2, because if you say 13.8, GST will apply, because place of supply will become India. CBIC has clarified that this will be a case of 13.2 and it will not be a case of 13.8. Then department's favorite area, intermediary. For department, everyone is an intermediary. But see, intermediary is a person who arranges or facilitates. A transaction involving supply of goods, services or securities. See, he is not providing the main service. He is only acting as a intermediary. He is not doing anything on his own account, because the moment he does something on his own account, he is not an intermediary. Then it will fall under 13.2. Location of recipient will become the place of supply and you will start getting export benefits. So there was a clarification regarding BPO or KPO. BPO or KPO, are they intermediaries? The answer is no. It will be a case of 13.2, not a case of 13.8. Those who provide advertisement service, advertising agencies. Can advertising agencies be regarded as intermediaries? No, they do the lot of drafting. They help you design the advertisement. They help you select slots. They are providing all this on their own behalf, on their own account, and hence it will be a 13.2 case. However, if an advertising agency is only helping the supplier and recipient to meet at a particular place, and then it is left to their discretion, then it will be a 13.8 case. So intermediary is the one who doesn't do anything except for connecting supplier and recipient. If the intermediary is doing anything extra, then he is not a case of 13.8 because he is doing that service on his own account. Then insurance claim processing. So say suppose a company does insurance claim processing on behalf of a foreign company, then again it would be a case of 13.2 because they are doing this service on their own account. Then web hosting, data web hosting services, will that be intermediary? No. So these are not intermediaries. But department always wanted to make it intermediary because see, all these people they never paid GST because the place of supply was outside India, no GST. Plus they used to go and claim refund of taxes paid on purchase because an exporter can claim refund of taxes paid on purchases. Now whenever they used to go to claim refund, the department used to say, it's not an export only, how are you coming to claim a refund? And that's why a lot of fund applications were stuck. Now all these clarifications have helped the industry to get refund in all these cases. Then the last one is hiring of a means of transport up to 1 month other than aircraft or vessel, but including yacht. So yacht, if you rent out for 1 month, then it's regarded as 13.8 case. This is short term renting, up to 1 month renting, where it will be regarded as a case of 13.8. The moment it's short term renting, it will be used in that place where the supplier is located, and hence government has kept the place of supply as location of supplier. The moment it is long haul renting, then in that case 13.2 will be applicable. Plus, other than aircraft or vessel will never come under 13.8 because aircraft or vessel, even if it is rented out for some time, it is generally taken to some other place, and hence government has gone by 13.2, not as per 13.8. Then comes 13.9, which was there earlier, transportation of goods. Now the entire transportation of goods has been deleted, so transportation of goods is determined based on 13.2. But be very careful. CBIC has clarified that even courier agencies will be considered in 13.2. It's not a performance based service because it becomes difficult to determine where was it performed. Hence, a position has been taken that it will be a case of 13.2. Now, some cases where you face a difficulty with regard to who is the supplier of this industry, who is the recipient of this industry. Supplier is the transporter, not the person sending the goods, because we are learning about transportation of goods, not goods. Recipient is the person liable to pay freight. Who is the person liable to pay freight? Generally, the consignor is the person who is liable to pay freight. But if the consignee is paying the freight, then we will consider him to be as the recipient. Then comes 13.10. 13.10 is transportation of passengers. Now, transportation of passengers, the law very clearly says that, say suppose there is a passenger transport service, then the place of supply will be where the person embarks for a continuous journey. And what is continuous journey, sir? Continuous journey is without a scheduled stopover. What is stopover? Stopover where you can get down of the aircraft or you can change the flight to continue after some time. That is called as stopover. So until and unless you passengers can come out, it's not considered as a stopover. So say suppose I am taking a connecting flight where I am staying in the same flight. The flight is going from Bangalore, Mumbai, Delhi. Then for me it's a continuous journey from Bangalore to Delhi. Second case, say suppose there is a changing flight, Bangalore, Delhi, again I get down, Bangalore, Mumbai, and then I get down at Mumbai and then take another flight from Mumbai to Delhi. Then these two will be regarded as two separate journeys. 1311 deals with on-board services. On-board services is on board of a conveyance. The place of supply is first scheduled point of departure. Thereafter, you have 1312, which deals with online information database access retrieval services. We will read this and 14 together. OIDR, the place of supply is location of recipient. Now, OIDR, LinkedIn, Facebook, advertising, all these are examples of OIDAR, where there is some information online. You are using it as database access retrieval services. So say suppose you are accessing that database or trying to retrieve that data, then it becomes a case of 1312. Now, what was the need to bring location of recipient here? Because anyways 13.2 uses location of recipient. The point is 13.2 clearly says that if recipient's location is not taken in the ordinary course of business, then it can be location of supplier. And these OIDR service providers may be outside India. Now if you leave it with 13.2, they will never take the address and they will say, I don't have the address in the ordinary course of business. So place of supply is my location, that is supplier's location, which is outside India. And hence there is no option given. They cannot use location of supplier because the law very clearly says that it will be location of recipient. Now say suppose it's a B2B transaction. Now we'll have to take supplier outside India. If it's a B2B transaction, then recipient will pay tax under RCM. Say suppose it's a B2C transaction. Then in that case, supplier outside India has to take registration in India, simplified registration, and pay tax. Now sir, how will the recipient outside India get to know that supplier outside India, how will he get to know that the recipient is an Indian recipient? There are 6 factors. Out of those 6 factors, if 2 are in India, then it is deemed that the recipient is in India. Credit card, debit card, mobile number, fixed line, address, billing address, IP address. Out of this 2 factors are in India, then it is deemed that the recipient is in India. And that's how supplier has to pay tax. Now this B2C, non-taxable online recipient, is defined. This non-taxable online recipient is any unregistered person who is located in India, plus it includes government department who have taken registration only for TDS, because some government department like CBI does not provide any outward supply. CBI is a government department which has taken TDS registration. Why do they take TDS registration? Because TDS requires the government recipients to deduct tax at source under GST. So if they have taken TDS registration only TDS, then in that case again they are regarded as non-taxable online recipient. And the moment you become a non-taxable online recipient, the supplier outside India has to take registration in India and pay taxes. Now even if this transaction is routed through an intermediary, that intermediary will be considered as the person providing OIDR service, and he will have to take registration in India and pay taxes. Then you have 1313. Now 1313 gives a special power to government to determine place of supply in some transactions. Using that power, government has determined place of supply for research and development in pharma sector. That the place of supply for research and development of pharma industry will be location of recipient and not where it is performed. Otherwise it would have been a performance based service, the place of supply would have been India. But these research and development work, which is bioanalytical studies, testing the efficacy of a product or a medicine, clinical trials, for all these the place of supply will be location of recipient, provided the contract is for export of service. And then you have vessel or aircraft related, maintenance, or their engines are also covered, maintenance, repair, overhaul. Again the place of supply is location of recipient, but it should be, these should be used in business. So that means this is only available for airlines which are being used, vessel and aircrafts are being used for the business activity. Then in that case location of recipient will be considered. That means aircraft or vessel, even if the repair is done in India, the place of supply will be location of recipient, that is outside India, so that export benefits can be given. So this is about section 13. Now when we come to section 12, section 12 will be used only when supplier and recipient are in India. Now generally what do you think, if both are in India, should we give input tax credit? Yes sir, obviously you should give input tax credit so that the recipient can reduce his cost and ultimately the consumer's cost reduces. And that's why at most of the places in at most of the places in 12 you have two parts. It says if you provide it to a registered person, like 12.2, generally any service provided to a registered person, the place of supply will be location of registered person. If it is provided to an unregistered person, then the place of supply will be location of recipient. If not available, then location of supplier. So if the address of the recipient is not available, then location of the supplier will be used. But notice, whenever you are providing to a registered person, do you even have a choice of using location of supplier? The answer is no, because if you are providing it to a registered person, automatically the place of supply will be location of the registered person. 12.3, immovable property. Now immovable property, the government, it also talks about houseboat and vessel which is used for accommodation purposes. Immovable property, the government has not used RP, URP. Immovable property, the place of supply will be where the immovable property is located or intended to be located. So here you don't use registered person and unregistered person. That means, say suppose a Karnataka CA firm books a hotel in Goa. What's the place of supply? Goa. Where is the supplier? Goa. What will be the type of tax? C plus S. Will Karnataka recipient get ITC of C plus S of Goa? The answer is no, because that C plus S gets buried in that particular state. You will not be eligible for ITC. But the law also says that if the immovable property is outside India, then the place of supply will be location of recipient. Careful about this point. Then 12.4. 12.4 is some performance services, but this is not as wide as 13. 13 is very wide. It covers so many performance based service because it says the moment recipient is making available the goods for some repair, for some processing to the supplier, it becomes a performance based service. Here it's a very narrow list like restaurant, outdoor catering, then you have fitness, personal grooming, beauty treatment. Such services are mentioned in performance based service, and the place of supply will be where the service is performed. Wherever the service is performed, that would be the place of supply. 12.5 12.5 deals with training and performance appraisal. Now, training and performance appraisal, is it very important for the businesses? As it's very important, government has gone ahead and created two parts, saying that if it is provided to a registered person, don't even look at where the service is performed, because it doesn't matter. The moment it is provided to a registered person, close it then and there itself. That means even if the training is held outside India, you will not keep the place of supply outside India. It will be kept here. Sir, but how can training be outside India? How can you use it in 12? It is possible that the trainer, supplier is Indian, recipient is also Indian, both are in India, training is being held in Sri Lanka. Possible. Then in that case, we will use 12 and not 13. If it is to an unregistered person, then it would be where the service is performed. Okay, 12.6 admission to an event. Admission to an event, the place of supply will be where the event is held. Wherever the event is held, that will be regarded as the place of supply. There will be no two parts, RPO, RP. Obviously, government would not give you ITC for entry fees. 12.7, very important, it deals with organization and sponsorship. Organization of event and sponsorship. Are these services important for the business? Obviously, yes. So that's why there are two parts. If it is provided to RP, location of registered person. If it is provided to an unregistered person, then where the event is held. But the law also says here that if event outside India, then location of recipient. This is there only at two places. One is immobile property, second one is organization and sponsorship. Then you have 12.8. 12.8 transportation of goods. Now transportation of goods, the place of supply would again depend on RP because transportation is a very important service for businesses. If it is provided to RP, we don't have to see where the parcel is, where is it going, where did it start, nothing. Location of registered person. If it is to unregistered person, where the goods are handed over for transportation. Careful, handed over for transportation. It does not say delivered, handed over, where it started. 12.9. 12.9 talks about transportation of passengers. Is transportation of passengers an important service? Obviously, yes. So, transportation of passengers, if it is provided to a registered person, then the place of supply will be location of registered person. If it is provided to unregistered person, then obviously the law uses embarks for a continuous journey. 12.10 on board services. On-board services, do you think RPURP will be there? Obviously no. The law has said first scheduled point of departure. Whatever is the first scheduled point of departure, that will be considered as place of supply. 12.11 basically deals with telecommunication sector. Now telecommunication sector, the law is very clear on this. If it is fixed line, then the location of such fixed line where the device is installed. Postpaid connection, then billing address is used. Prepaid, if it is through a selling agent, then selling agent. If it is directly to final consumer, wherever prepayment is received. Online, location of recipient. Any other case, first try to find out the location of recipient. If that is not available, location of the supplier. So here device, here billing address, here you have three cases: selling agent, final consumer, and online. And others, anyways, location of recipient, otherwise location of supplier. Okay, then we have 12.12. 12.12 deals with banking. Banking and stockbroking is important for exams because it is a different kind of place of supply. Here the law has divided it into two parts, but there is no RPURP. If the address is available on record, then such address. Whose address? Recipients. If no address is available on record of the supplier, then it will be location of supplier. 12.13 talks about insurance. In insurance, do you generally give the address? The answer is yes. So RP, location of RP. If it is provided to URP, then address, because address of recipient will be available in case of insurance. Then 12.14 basically talks about advertisement to government. It has to go to each state by way of dissemination, meaning wherever it is getting consumed, for each state tax should be bifurcated. First you go by the agreement. If agreement is not there, or if agreement does not specifically provide for something, then it will be depending on various circumstances. Like first, say suppose agreement is not there, first go by the type of service. If it is TV, viewership. If it is radio, advertisement, number of radio stations in each state. Cinema hall, number of screens in each state. Hoardings, number of hoardings distributed in each state. Pamphlets, number of pamphlets distributed in each state. In case you go by railways, length of track in each state. Railway tickets, number of stations in each state. Utility bills, number of consumers. SMS advertisement, number of telecom subscribers. Internet, number of internet subscribers in each state, and divide it into each state. Also, IGST rules provide that in case some detailing is not available in the contract and it is in more than one state, then how do you divide it? Like if it is immobile property related and the contract is for two immobile properties located in two different states. If it is accommodation related, then based on number of nights. If it is related to houseboat, where houseboat was near Kerala for 22 hours and 2 hours near Karnataka waters, then number of hours as declared by supplier. Then if any other case of immobile property, then try to divide it by area. Then say suppose you have a case of events. Then the law has said based on generally accepted accounting principles. If the event is held in 4 states, divided based on generally accepted accounting principles. Telecom lines in different states, number of points in each state. And if it is performance based service. Performance based service, if it is related to goods, then if it is same goods, then go by equal. If it is different goods, then go by the value of goods, which is checked or performed in each state. If it is individual related, makeup done at more than one state, then it will be based on generally accepted accounting principles. So this is what the IGST rules provide for. Then you have a very simple discussion of section 11. Section 11 deals with goods international transaction, and there's only 2 international transaction. One is import and second one is export. Import, the place of supply will be location of importer. Careful, it says location of importer. It does not say location where the goods were imported, because importer might be in Karnataka but the goods would have come to Chennai port. Location of importer. Export, the place of supply will be outside India, because the moment it is outside India, we'll start getting export benefits. Then you have section 10, which deals with goods domestic transactions. Now, goods domestic transactions, we have various segments. The first one is 10(1)(a). Say suppose supply involves movement. Now if the supply involves movement, the question is what would be the place of supply. The law has said if the supply involves movement, then where the movement terminates for delivery to the recipient. Terminates for delivery to the recipient. So if the goods are going from Bangalore to Mumbai, where does the movement terminate? Bangalore to Mumbai. Mumbai, sir. That would be the place of supply. Then you have 10(1)(c), which deals with supply does not involve movement. Now if the supply does not involve movement and the goods have been sold without any movement of those goods, then the place of supply will be location of the goods. Then you have one new point, 10(1)(ca). Now 10(1)(ca) talks about supply to unregistered persons, because see, registered person will himself tell where he is from. He will give all the details. Supply to unregistered person, the problem was whether we have to see where he is taking the goods or whether we have to see from where he is buying the goods or where it has terminated. How do we do it? So 10(1)(ca), first of all 10(1)(ca) overrides 10(1)(a) and 10(1)(c). And here the law says if the recipient gives his address available on the records of the supplier, then such address of recipient. So say suppose I go to Delhi and give my address saying that I am from Bangalore, then the place of supply will be Bangalore. If no address is given while buying the goods, then it will be location of supplier. Then you have 10(1)(d), assembly or installation. Assembly or installation. For assembly or installation, the place of supply will be where the goods are assembled or installed. Then you have 10.1e. 10.1e talks about goods supplied on board of a conveyance. That was services on board of a conveyance. This is goods on board of a conveyance. Goods on board of a conveyance, the place of supply will be where the goods are taken on board. Wherever it was taken on board, that will be regarded as place of supply. Then you have the last one, which is very important, 10.1b. I kept it for the end. Bill to ship to transaction. Billing done to one person, shipping done to one person. The person to whom you bill, he is called as the third person in this. And the person to whom you are shipping is called as the recipient or other person. Because he can be a recipient, final recipient, or he can be some job worker, and that's why the term other person. So the law says principal place of business of such third person on whose direction the goods were delivered to the registered person. Now, say suppose A is in Delhi, B is also in Delhi. Invoice is issued here, and the goods are delivered to C, who is in Karnataka. What will be the place of supply? Sir, third person who has ordered, he has ordered, so the place of supply should be Delhi, sir. Now, as per 10.1b, it will be Delhi. Now, there is a clarification by CBIC, very important for exam. CBIC has said that if it's a online transaction and you know that the goods are going to get delivered to Karnataka, then the place of supply for that transaction, if B is unregistered, then 10.1ca can also apply, and address is available, then such address should be used. Now which address to use? Because there are two addresses, one is Delhi address, one is Karnataka address. Sir, technically it should be Delhi, sir, because 10.1b is also saying Delhi, so it should be Delhi. Now, government has said that the place of supply will be delivery address, and they have given an instruction to the supplier saying that you use delivery address as the place of supply, and that should be considered as address of the recipient. So the place of supply will be Karnataka. So sir, if we get this question, how do we tackle it? Now, 10.1b will be used only when recipient is a registered person. The moment recipient is unregistered person, you will use 10.1ca and you will use the delivery address, that is Karnataka. So be very careful of this. Don't make a mistake on this important aspect. So this was about place of supply. Let's now go through all the points once. Let's see. So we started from here. From 7 to 14, these are the provisions which we learn in place of supply. 13, when one of them is outside India, we go by 13. 13.2, generally location of recipient. If that is not available in the ordinary course of business, supplier. 13.3, basically performance based, where it is performed. If it is not performed in India, if it's not put to use in India and exported, then outside India, 13.2 will be used. Immobile property, we very well know. Admission or organization, here it is same, 13. 13.6, more than one place, one in taxable territory, in the taxable territory, more than one state, in each state. Three services. Place of supply will be location of supplier. Banking to account holders, intermediary, hiring of a means of transport. Be very careful in intermediary. 13.9 is not there, so you'll go by 13.2. 13.10 transportation of passengers. 11 on board. 12 OIDR, supplier has to take registration and pay the tax. 13.13 two cases where government wanted to encourage exports. 12 location of supplier and recipient is in India. Generally government wants to give ITC. There are 4 cases where there are no 2 parts. Immobile property, performance, restaurant, etc., admission, and last one on board services. Remember these 4, otherwise normally you'll get ITC in other cases in your state being the recipient registered person. Okay, then IGST rules talks about where the mobile property is located, events, what to do, telecom if it is in more than one state, and performance based. 11 goods international transactions, export location of importer, import location of importer, export outside India. Goods domestic transactions, see which case is covered. Be very careful between 10.1 CA and 10.1B, because 10.1B now technically is applicable for exams to registered person. If it is to unregistered person, then you have to go by 10.1 CA, and the address will be the address of delivery, applying that government is trying to use the consumption principle. Yes, revise it again. See you in the next video.